Hello everyone, welcome to the Elliott Wave Forecast.com YouTube channel. This is Henry. Today is Tuesday, April 26th. The time is around 2:30 a.m. GMT. Today we are going to take a look at the chart of S&P 500 EMini futures. We can see right here, okay, that we ended this W in the intermediate degree right here, and so now we are doing an X rally, right? And the X rally is in the form of a zigzag ABC, in which we should be ending the first leg A soon and then pull back and then another leg up, and this entire zigzag is expected to fail below 4509. This is the Friday high, last Friday high, last week, and then from there we can then go down again. So you can see this one, a nice impulse 1 2 3 4 5, ending a C leg. So this W in the intermediate degree subdivides into a C B A. So it's an ABC zigzag ending the W here. So let's zoom out to get some ideas what we expect. Zooming out on the daily time frame. Now remember this A, B, and C ending W. I will transfer these labels into the daily time frame to get an idea of the larger degree. So this is the daily time frame. Now again, we have all the complete labels in our service. If you do want to check for all time frames, weekly, daily, for hourly, and so on, in the daily technical video, because it is free, we're just explaining in one particular sequence or one particular cycle, but not the entire view. Okay, so over here you got this ABC ending W, and this is where the ABC W is on the daily time frame, and that means we are looking for an ABC rally now. Now notice here that that means we are supposedly ending the cycle of the ABC. So now we are doing a 3 rally to correct this entire decline from March 30, right? So this is March 30 here. So looking to be doing a ABC rally to correct this entire decline, and then of course after that we should be going down in the Y leg. Now the Y leg should be also corrective, right? Now this Y leg, it has to break below W, because otherwise it will not be WXY, right? So it should be something like this by nature, right? So it should be something like this. Now we need 3 swings, and this should be ABC again, something like this, right? Now a lot of people asking what will be in the internal. Well, the internal of the Y can be any corrective structure. It can be a flat, can be zigzag, can be even another WXY. As long as it is corrective, it is possible as the internal of the W or the Y. Okay, now all right, so that's basically the expectation. So the rally, therefore, it should fail. Now the B, this B 4509 is an important level, but actually if you look at the daily, because the X here is correcting this entire decline, so actually the more important level is not the B. The more important level not to be violated is actually this 330. This is the real key level here. Now technically speaking, you can have a big X that goes all the way up here and still can be counted as an X to fail again. Now even though that probably is not going to happen, but just from technical point of view, the real key level for this bearish view or for this move down is not a P. The P is not the most important level. The most important level according to the structure is this one, is the March 30th, right? So as long as we stay below there, then we can go down again, expecting another leg down. And so this is basically looking for a break even below this February low, right? So if, let's say, if you want to count this as another, I don't know, WX, let's say then that means potentially you can measure it this way from this peak, which is the all-time high January 4, right? So you have January 4, your all-time high, and then you have secondary high on March 30th here. So let's call it WX in a higher degree time frame, higher degree label. So let's say if this is your minor, this is your intermediate, this is your primary degree, something like this, right? So this one, the internal, you can label it either ABC or WXY. It doesn't matter, to be honest, because it's already happening, so it doesn't really matter. If you believe this is a 5 waves and this is 5 waves, then label it as ABC. If you believe this is 3 waves and this is also 3 waves, then you label it WXY. It doesn't matter. Okay. So you can call it this way, and there you go. You got everything in place. So what that means then is we should be expecting a move down. It can go all the way down to this one, which is based on this equal to this. It can go all the way down to almost 4,000, right? Almost 4,000, but it's not going to be down straight line, and that's why we have on the lower time frame to give you an idea of the oscillation. But always keep in mind on the higher degree. A lot of people only focus on the 1 hour but never really understand what the higher degree expectation is. So the higher degree is looking like this, and now what we are doing now is correcting in 3 ways. But remember, the correction is not just correcting this. The correction actually is correcting this entire decline from March 30th, right? Now what can be the alternate? Well, the possible alternate while maintaining the bearish view is that we actually extend lower right away. Now if we extend lower right away, that means it's not like an X finish here because it's going to be too shallow. That means this is a 1, 2, right? This is a 3, and then you got a 4, and you got a 5 down, and that will be ending an A instead of a W. So that will be a possible alternate while maintaining the bearish view. Okay, while maintaining the bearish view, and then you will cut a B before a C. So that will be a possible alternate, and this is still maintaining the same bias on the downside. Now what if we don't even break lower at all? I mean, if we don't break lower, then this is an ABC and we rally again. Is it possible? Technically speaking, this view, it has to break below this one to confirm the previous low, right? So we got a bearish bias, but if you look at the daily, it really has to break below here to confirm that. So until that, we're not saying this will happen. Now remember, we understand the alternate, but we are not calling that. So you need to differentiate between alternate and the main view. Just because I explained to you the alternate doesn't mean I'm not confident or I'm wishy-washy. No, I still prefer to see more downside, but that doesn't mean I do not understand the alternate. The alternate means this is actually just an ABC correction, all right? And this probably, let's say this is the end of this three string correction. You can call this whatever you want. Let's call this with 1, and this is your with 2, and then this is another with 1, and this will be your ABC with 2, and then going up again. Now that is the alternate. Now if that happens, then our view is not correct, obviously, right? But that's not what we are calling. We are calling more downside, and within the possibility of more downside, we offer you 2 possibilities. The main view being we are ending W here and now doing a 3-ish rally in the X, right, before going down. Or another similarly bearish bias will be another leg down right away to finish A as a 5 waves before we got a B and a C. So I think The main view makes a better view in my view, because because you got a rally from here that looks like a 5 waves, so favoring more upside as a result. So and then so this cycle looks to be completed if we continue to go up, because otherwise it will be too big to be wave 4, right? So and then this is so far only 3 swing and only at the 100%, so this one looks a better view as a main view, and so that's what we are calling for. A3 is rally now to fail, and then it goes down again after that to finish this entire structure right here. All right, so that's the update for today, and as always, if you want to get regular updates, I will provide the link to try our service for 14 days. So I'll see you all again next time. Have a nice day, everyone.